Hey everyone, and happy Friday. Welcome to Trader Tales with IBD. It's your host here, Alissa Coram. And joining me this week, I'm super excited to have author and market historian John Boik. John, so great to have you on the show.
Hi, Alissa. Thank you for having me. It's a pleasure to be here.
So great having you. So on today's show, we're going to start at the current and then zoom out and take a step back and get some really great insights from John about some of the best lessons that he's learned through studying the best traders of all time. And also we'll dig into how history repeats itself. At IBD, we're all about studying history and utilizing that in the current. So let's start with the current. John, what are your thoughts on where we're at in what has been a crazy 2022?
Well, we started a downtrend back in November. So you've been in an 8-month downtrend, and the last couple weeks or so, it's improved quite a bit. There's still a couple things missing, but as far as, I mentioned this a bit of maybe a couple weeks ago. So you needed the moving average lines to start sloping upward instead of staying downward. So you got the 50-day and the 21-day on the averages now sloping upward. You got the 21 over the 50. That helps a lot. Mm-hmm. So the heavy selling looks like it's subsided. So it looks like, everybody's like, have we bottomed? Possibly. I mean, it looks like we may have. But the other thing I look at really to gauge where we are in the market is the new high, new low list. I do that a lot on Twitter. I put that in my new book. I track that every single day. So yesterday, I haven't seen the numbers yet today, but 8 in a row. So yesterday was 7 days in a row of a positive new highs, new over new lows. That's the longest streak we've had since mid-November when this downtrend started. So from November when we went into a downtrend to yesterday, 2 weeks ago, 80% of the days were negative at new lows exceeding new highs. Mm-hmm. You cannot have an uptrend with new lows exceeding new highs. It's mathematically impossible. So this happens, and this doesn't just happen now. I'm going to sneak in a little bit of history right now. So there was a book in 1960 by Gilbert Haller who tracked 20 years of this, the Dow with the new highs and low lows, and it matched up perfectly with all the declines, all the corrections, all the bear markets, all the bottoms, all the upturns. And I did it in my other book with 2020 and 2021, and it's incredible how that lines up. And I'm not the only one. Stan Weinstein uses that, Alexander Elder uses that, Gerald Loeb used that. So I got off track. But
no,
it's a guidepost. It's a guidepost that helps. So 80% of the days until 2 weeks ago, new lows were exceeding new highs. I mean, 80%. That's upside down. So now you've got 7 days in a row. They're pretty small, plus 20, plus 30, et cetera. But it takes a while. I went back to all the other corrections recently we've had, and those will compound on each other if this uptrend continues on. And you can go 3, 4, 5 weeks out when you start getting 100 plus on new highs over new lows, et cetera, et cetera. So that's a key. More volume coming in on the up days would be nicer to see. But the real problem that I see is the lack of new leadership that would be coming up. It's not unusual to not have it yet. There's been a couple names that look like they're leading the pack, but it's really a short list.
Yeah. So
it looks like a lot of this rally in the last couple weeks could have been a lot of short covering because there was a lot of shorts out there, and beaten down tech stocks that dropped from the 2020 monster stocks we had and some of the 2021. Those guys that dropped 80, 90%, history shows they don't come back. They'll come up, but they're not going to come back and lead. Every single new uptrend has new leadership in it. It's done that for 150 years. So where is that today? It's very slim. There's a couple of them, and you have to start adding on to that, but some of them are starting to base better. And it's not unusual after an 8-month correction, one of the indexes being in a bear market,
right,
to have some time to build on that. I always say you can't build a skyscraper out of a hole in the ground within 1 to 2 weeks.
right.
It takes time. You have to build the foundation. And, so, end phase is, to me, the leader. That's popping up. It's sort of a new industry. It's a leading stock right now. Celsius had a down day today, but if you looked at it, what happened today, it bounced right off that 10-day line. So those are really the two major stars that I see so far. And you want to be, if this runs, you want to be in those first couple, but good stocks that build good bases, they can break out 2 months from now, 6 weeks from now. It takes time to do that. And I showed tossing in another history one. I put the 1990 bottom on Twitter the other day. And I showed the bottom. It was a pretty big correction. And then it bottomed out, and it backs and fills, as bottoms do, and they can bounce along that area. And then you had some leaders come up. And then you have 2, then you have 4. And then a couple weeks later, you have a bunch more. And then even 2 to 3 months later, you have a whole slew of them. So I counted, there were like 29 of them within 2 months. But a lot of them came out, after several weeks.
Yeah.
We're only in this 2 to 3 weeks if you look for the bottom area somewhere in there. So I guess that's my answer. I would be
great.
I would step like me. I'm in those 2 names.
Nicely done.
One, LNTH had a big wild day yesterday, but had great numbers, and it bounced off its 21 day this morning. I had it in yesterday, but that's about it. I'm not seeing, and I look for liquid names. I'm looking for the leaders. Those 3 names are interesting to me, but there's just not a lot. A lot on Sunday nights on Twitter, I'll post some watch list stuff. I think I've had 6 names. I mean, that's just me. I like liquidity in the name too. So I'm not trading low shared number of shared stocks. So I guess that's a long answer to your question, but
it's a good answer. And, John, just to jump in here, the market has a lot that it still needs to prove. We still need more evidence. I'm throwing my dog a bone, literally, because she's whining at me. But great minds think alike, because Minervini on Wednesday's IBD Live was also talking about that 1990 bottom. So pivoting here now to talk about what you do, and that is to study the greatest traders of all time, not even just of our time, but throughout history. And I feel like that puts you in a very unique position to not only analyze the current environment and to have an edge in your trading, but also just what we as traders can learn from the commonalities, the maybe surprising number of commonalities that all of the best traders of all time have.
I think if you don't understand history in the market, when I say history, I mean the top traders going back to 1888, which was Richard Wyckoff when he got started, to all of the decades of the market, the ups and downs, the flatness, the sideways, the bottoms, putting in the failed bottoms, etc. And then the stocks that did it. If you don't understand that, I think you're at a big disadvantage. And I was at a big disadvantage when it started out. I had no rules, no strategy, no nothing. Watching CNBC, bought a stock, lost money. I mean, I made every mistake everybody did. Plus, I think I invented some new ones. So if you don't, the thing that turned me around was getting deep into into history. Who are these successful people? How did they navigate through? And what were the stocks that they did it on? And if you understand how the cycles work in the market, I'll throw you another one. So 1990, there was one. Even more relevant, is the 1982 bottom. So in 82, you had high inflation, high interest rates, GDP in decline. Gee, sound familiar, right? So, and 81 was a pretty hard market, but 82, that market, the first 6 months of that year, the Dow was down over 20%. So we had that in the NASDAQ the first 6 months of this year. The good news is in August, mid-August, that market bottomed out and started to take off. O'Neill was right there watching that and piled into the leaders in the late summer and fall of 82, and that thing took off. 1962, you had the same thing. You had a brutal first 6 months of the year. And then in October of that year, that's when the market turned up in there. And Chrysler was, at that time, built a perfect cup with handle pattern. Mm-hmm. O'Neill, not just O'Neill jumped in on that. Gerald Loeb jumped in on that. And Bernard Baruch, he's like in his 90s then, and he's still trading. All three of those guys, the legends that did it, saw that, waited for the market to confirm itself. It did, and they all jumped in on Chrysler. I think they all either bought it on the same day or all bought it within 2 days of each other, and all rode that thing up. And that was a big winner for O'Neill. Now he sold that one up on the rise because he looked at Syntex and jumped into that one and just killed it with that. So let's go further back. 1942. Now you see this is a coincidence. Every 20 years. 1942, the markets were down over 20% again from January through June again. Same thing we had this year. Same thing in 82. Same thing in 62. In 42, it did the same thing. And then it took off in August of 42 and had an uptrend. So let's just fill the puzzle one more time. 2002, another 20-year cycle. You know, you had that brutal bear market starting in the spring of 2000. Mm-hmm. By 2002, that thing was a wreck the first part of the year. And then it started to bottom. And then in October, it bottomed out again. And O'Neill picked up eBay on that bottom. That was the bottom in October of 2002. That market, because that brutal bear market was so long and hard, that it waited till like the spring, March of 2003 to get going. So look how long that time frame landed, even though O'Neill saw the first one really come up off of that bottom. He made a killing on that. And from what I've read and what I've researched and a couple secrets I know, he piled into that with, I think, one of his biggest positions ever. And then in 2003, in the spring of 2003, when everything was taken off and that market turned around, he rode that up and then landed some of those other big ones. Same with Ropel too, in the spring of 2003. So here's a ton of history there. 1942, 62, 82, 02, 2022. I mean, it's a coincidence every 20 years, but I told you this the other day on the phone. Get your calendar out and mark 2042 and just say, watch out. But
yeah, who knows? We still got a couple months left in 2022, and we are in August. So August to October, we should be on the edge of our seats, it seems.
Yeah, like, so I mean, it's just something. It doesn't mean it's going to happen again. Trust me. You know, I don't want people to think I'm crazy that this is going to happen, but it's happened so many times. And it's not just the 20-year marks. It's every correction or major bear market. And these guys that I studied, they all study that stuff. They studied the market, how it works, how it tops, how the leaders top, how they fall, how the market goes into a correction, how it can get into a bear market, how it bottoms. It's all similar, just like they found that their strategies were similar and the stocks are similar. Jesse Livermore was a tape reader back in the 1890s and 1900. Wyckoff was a tape reader. Can you imagine reading the tape all day? Wow. But these guys, they saw patterns occur. And they said, Livermore was just like, he noted them down in this little notebook. He goes, these patterns keep recurring over and over again. Wow, new leadership coming up. breaking through resistance points, pocket pivot points, the whole thing, on volume, racing up, new leadership, et cetera, et cetera. Mm-hmm. It's happened forever. It keeps repeating itself. So do you have another question?
I
you got to fill me in a little, or I'm going to be here,
No, this is great. And I know there's so much information that you've said, you have 140 years of market history in your head and, willing to share. And how lucky are we for that, that you're so excited to share that knowledge with us. And I feel like that's something that you have in common with the greats. And, I was able to, had the luck and honor of knowing Bill O'Neill as a person working for IBD when I first started out. Bill was in the newsroom, and so it was great to be able to get to know him. But he has always just been so generous with his time and with his knowledge, and that's definitely a trait that you share. Now, I want to know, of all of the books that you've written, and you've written some fantastic ones, which one's your favorite?
Well, they're a progression, so they're all different. The first one was about 5 guys over 100 years. Of that 100 years, 100 plus years in the market, of that time frame, every single day that market was open, one of those guys was active in the market. So it covers everything that you've seen. So from 1890 to whatever that 2003, I think. So that was about them and all their strategies. But if I can just add this, their strategies were similar, but they tweaked them to their own personalities.
And I feel like that's a big lesson right there.
That is
you can't just copy.
We can do a whole hour on that, because that is so fascinating how, yes, risk management is number one. Cut your losses, let your winners run, be in sync with the market, look for new leadership, all this. But they all tweaked it to their own personality. And that slide will show you. What I did here was, this is kind of the cliff notes of all of their strategies combined and the key points of each one. And I have a thing in there that says, make it to you. Here's the thing. I tried to be William O'Neill after I wrote my first book, and it was a disaster because I'm not him.
Yeah.
And he is so detail oriented, 10 cents above the handle buy. Yeah. And I'm like, I'm not like that. So I think I related more personality wise to Darvis, because he was looking at I just want price and volume. And if it's breaking out through these boxes that he created, this box theory, the box theory is just O'Neill's basis. Okay. Mm-hmm. And then Jack Dreyfus, who ran the Dreyfus Fund in the 50s, his first job when he was 21, he worked for a chart guy. And this is the 50s. And the chart guy told him every day, I want you to plot every single price and the volume. He hand drew the chart.
Wow.
And so Dreyfus did this day after day after day. And he's just like, wow, these patterns all look similar to me.
And Bill learned a lot from Dreyfus.
Well, Bill's the one who found out. He mailed in for 100 of Dreyfus's buy points and got the prospectus and then plotted them himself. And he said,
connected the dots.
This guy bought every stock when it made high-end volume. That created a lot of the base structures that O'Neill did. So you had Darvis with the box theory, you had Dreyfus plotting charts by hand, you had O'Neill create the charts and name them, the saucer, the double bot, all those things. Yeah. And then O'Neill in the 60s put the first computer database together with all the statistics. So he created what I call the baseball card. The chart's on the front, all the stats are on the back. Nobody had done that before.
Yeah, incredible.
Because he dug in so deep. He said, there's got to be a reason why the patterns look the same. So then he said, well, it's in the numbers, in their financials. So sales growth, revenue growth, ROE, et cetera. And he connected all those dots. But let's go back to Wyckoff and Livermore in 1890, 1900. They saw the same things happening. They were just reading it off at the tape. Now jump to current day. You got these guys, David Ryan and Jim Ropel and Minervini, these great traders, they're doing the same thing. They're looking at patterns. They're looking at supply and demand coming in. They're looking at new leadership, et cetera, et cetera. Nothing's changed. So it's like, so that's a long answer. Like, which book is your favorite? Let me just jump again. And again, I know I'm jumping around and we're tight on time. But
no, this is great. It's because I think, what this is showing is there really is a lot to learn from history. And I think, a lot of people who are maybe fans of Bill or who know Minervini or Ropel, but really haven't gotten to dig in deep with a lot of the great stuff that you've researched. This is a good little taste of, some of those fun tidbits, but how, the lead up to how to make money in stocks, to where we are today, and even to IBD Live, just kind of like that next generation, that next iteration of sharing all of these strategies with everyday investors.
It's all there. So let me go back. So my second book was about the whole history of the market. Every chapter was a day. That book I referenced way more than any other book. I think I picked that up, especially when we're in a bear market correction. I go, that's how, how does he know 82 did that or 62? It's all in there. So I was like, oh, this is what those guys did. They all moved off to the sidelines. Okay. Now, Baruch and Livermore were shorters. So they shorted stocks and made some big money on that. But Loeb didn't short stocks. Darvis didn't short stocks. O'Neill was very limited on that. And Dreyfus didn't short stocks. So during those periods, these guys just sat back. They waited. Patience and discipline is so key to that. But we're humans, right? So we have to get in there, take the trades, and then we're messed up. But monster stocks I like because then it details. So it's the progression, the traders, the history of the market, and then what were the stocks. I took a 10-year period, and they all look the same. And I put Ropel and O'Neill in there because they landed those during that time. But this year I put out Monster Stock Lessons 2020, 2021. And that I did it because those 2 years showed huge differences in the market. So now we'll jump a little to the current. So 2020, March 2020, COVID comes out. The Dow drops 33% in 1 month. It's one of the worst months in history. Everybody's life changes. Everybody thinks everybody's going to die, and the world is over, right? So then, and the new high, the new lows, I never saw numbers like that. 3,500 was the variance, negative. 3,000, 3,500, 20. I mean, the market just went straight down for 1 month. Then in early April, oh, maybe it's not so bad. It is. Don't get me wrong. COVID was horrible. It almost took my mother, but life moved on, and everybody was changing their life. What were the first two stocks up out of that uptrend? Zoom and DocuSign.
Peloton.
Peloton, because now nobody's going to leave their house. So we got to bring our gym in the house. We got to bring our office in the house. We got to bring documents in the house. And those three stocks ran, and I interviewed 6 traders for that book. They all hit those stocks. Those were the leaders. So new leadership, they came in. That run from April through to September could have made your year, and it made a lot of people's years. So a lot of guys a lot of women and traders had triple-digit years. I had it. If I can do it, anybody can do it. So, but stay in tune with what's going on and
filtering out the noise, right? Looking at the charts.
Yeah, look at the charts. And I mean, if you just listen to the news every day, it's like the tallies of how many people are sick and dying, and it's just like you would never have touched a stock.
Yeah, I remember even on CNBC, they had their nightly special called Markets in Turmoil, and they were still running that special with it called that when the NASDAQ was back at new highs.
The NASDAQ was I mean, so in that upturn, here's what happened off that bottom, that 33% decline in the Dow. That upturn comes up. It came up pretty fast. So new highs start to exceed new lows the first, second week of April. And it continued that way. As a matter of fact, just to prove the point, Late April, May, June, July, and into August, there was not one single day where the new lows exceeded the new highs. I think it was 96 days in a row. That is a solid uptrend. That is a power trend uptrend above all the moving average lines. You had new leaders breaking out, but not all of them in April and May. In the summer, in June, July, you had a whole slew of new names come out. Mm-hmm. In that book, in the Monster Stock Lessons, I have 29 stocks from 2020, all marked up, that became monster stocks. 29 of them. And they all had to trade at least 1 million shares a day. So there were many more than that. But they all looked the same. History repeats itself again. They all formed bases in March and then came up in April. They break out. They bounce off these moving average, the 21, the 50-day. They're bouncing off of that. They're coming down on low volume. They're pulling up on higher volume. And then what happens to Zoom surprised everybody. If you listened back then, you thought Zoom's going to be the leader for 10 years, right?
I still rely on it heavily on a daily basis. But that doesn't mean it's, and I have a Peloton bike that I got a couple months ago, but that doesn't mean.
But Zoom was one of the first ones to top in the fall of that year. It didn't last long. I mean, I was in Zoom. I saw that. I'm out of here. You're there's a climax run, and then you're slicing moving averages in heavy volume. It's already ran it up, they're going.
Yeah.
Okay. And then I mentioned this on Trader Line. The most perfect stock in 2020 to me was Livongo Health. Okay. Livongo Health is in the business of trying to fix COVID.
Yeah.
It builds this beautiful base in April. The market confirms and turns up, and Livongo breaks out like at 25, 26. It runs all the way up the whole trend through August. It never once broke the 21-day, and it pulled back just slightly and bounced off that thing 4 or 5 times. Then in August, they announced a buyout.
Yep.
They're being bought out for $140 a share.
Yep.
And that's the greatest sell signal ever, because you don't have to make any other decisions.
Yeah.
The market's going to take it to the sell signal and then sell it, and you're gone, because it's not going any higher. So that stock, I put these guys in there. Oliver Kell made 400% on that stock in 4 months. Matt Caruso did it. I was in that stock. That was the perfect stock for 2020. And then in 2021, now we roll over here. So in 2020, September, October, pull back a little bit. November, December takes off.
Yep.
January is hot. February is hot, but subtle signs start to pop up. Then in March, you're seeing breakouts not work as much. Mm-hmm. And you're seeing
DocuSign and Square and those kinds of stocks, they just couldn't get going.
But you're seeing sector rotation. Mm-hmm. So a new batch of names come in, but they took off and they maybe for a week, and that's it. Now Minervini saw this, and he changed his strategy. He shortened up his time frame. I don't mean he changed his strategy. He shortened up his time frame because he
adjusted to the current environment. Yeah,
we did to that. I saw it, but I didn't do that, and I'm still kicking myself in the head for that. And you know who else did that? Gerald Loeb did that same thing in 1931 and 32. He shortened up his time frame. He called it skittish trading. It's what we call swing trading today. Yeah. He called it skittish trading. And he was profitable in 1930, 31, and 32, the worst bear market in history. He was profitable from the long side, hitting skittish trades like that. He tightened it up because that's what the market was offering.
Yeah.
So Minervini did that, and then he wins the championship, which he should have. Mm-hmm. So then,
may I just add, David Ryan, he did it a little differently. What he was seeing is he was looking at the industry group ranks. So that's how he was looking at the rotation, and he had some stocks like Nucor and some of those other commodity plays really before at least people were looking at them in large numbers. So uncovering the rotation that way, maybe not necessarily shortening his time frame, but just looking left when everyone was still looking right.
Right, and that's a great attribute for him. But Nucor, see, they didn't last, because I was in Nucor too, and I was like, how come this thing isn't screaming higher? Why? Because the sector rotation kept rolling it out and then rolling in another group 2 weeks later, and then another group and another group. Mm-hmm. And so we get to November of last year, and the market's kind of wobbling. And then mid-month, the new lows start to exceed the new highs. I'm like, this hasn't happened in a while. And then IBD
So
calls
the key metric there, the
key
new
metric.
lows, new
I mean,
highs.
it does work. It's not perfect, but it's a guide. I use it as a guidepost.
Yeah, good
So
secondary indicator.
Because look, there's different types of uptrends. There's strong uptrends, there's weaker uptrends, there's and there's the same for corrections and downtrends. So there's variations of that, but that guide helps me determine how strong or how weak that can be. And so then we start seeing that, and then IBD calls it a correction, and then from January through 2 weeks ago, we're in this downtrend. So if you step back and you read history and what these guys did, now it's great to look in hindsight. You could say, man, if I rode that uptrend from April through September, and you could have stayed through it till February of 2021, and then cashed out, you would have had a triple-digit gain for sure. Mm-hmm. And unless you're the Minervini skittish, tighten it up like that, you could have sat out 2021 and just played a few of those, and then sat out the whole first half of this year. So
yeah, that's so hard for a lot of active traders
because we're humans, and that's our downfall. So
exactly, but another lesson is learning from those mistakes, because the greatest traders of all time didn't start out as geniuses. They got to where they were because they put in that grit and that hard work, and they never gave up and took the time to study not only what others who were successful were doing, but their own mistakes and learning from them.
That's right. So.
Exactly. Okay, I have another question for you, and you kind of touched on this a little bit, but what trader that you've either interviewed or studied do you relate to most? I know you mentioned Darvis. Is that who you would go with, or is there anyone else or more detail you can provide on that?
I like, first of all, Gerald Loeb to me is the most underrated great stock trader ever, in my opinion. I studied him extensively. This guy was in the market for over 50 years. He made a lot of mistakes up front, then learned how to read the market and did all the things that the other guys did. And he never blew up. And he also wrote, so I like to write. So he wrote a lot of financial documents to help people. So I like him, but I'm not that skittish trader like he is. I tried the short time. I'm kind of working on that now to get a little better at that. But I probably relate more to Darvis and maybe Richard Wyckoff, because he wrote a lot. And Wyckoff came out with the Ticker magazine in 1907 to educate the public on how the market really worked. He spent 20 years studying it. And, the Wall Street Journal was out at that point, but it's not telling you how the market really works. It's more of a business newspaper. Okay. So he came out with the Ticker magazine in 1907 to do that. And that thing ran for 20, 30 years. It turned into the Magazine of Wall Street. He interviewed Jesse Livermore many times. He interviewed James Keene. All these great traders before him, that's how he learned that. And so I like that from him. And his trading style, he was not the big trader like Livermore was, but Wyckoff never boomed and busted either. So he was consistently steady his whole career and very successful. So I would say a mix of Darvis, Wyckoff, O'Neill, of course. I mean, what does Ropel always say? He goes, I'm a hack. I'm just a takeoff from O'Neill.
Oh, that's funny.
But, Jim's a great trader, so you can't argue with
He is. So. He really is. And, okay, another question for you would be, what modern day successful trader do you want to interview or speak with that you haven't yet? I know you mentioned Matt Caruso and Oliver Buchel in your most recent book, but who out there is someone you would love to speak with?
I'd probably say you.
Oh, yeah, right. I'm flattered.
Well, I would like, we were talking beforehand so people know your history with O'Neill. I mean, that would be great. I mean, I would think that would be great to hear.
Yeah, I would love to share that.
I don't know a lot about David Ryan, but I know his successes, or Charles Harris. Those guys that came from O'Neill, Mike Webster,
Yes.
guys like that. So if you're listening, call me. I want to talk to you. So guys like that, and like I did Matt Caruso. There's some really new young studs out there that are really doing well. So
Yeah, doing awesome stuff.
some of those guys too. So
Yeah. Well, it's it's great because history is repeating itself in that there's so much of that foundation from all the greats that are continuing to be learned from and iterated upon. Because I think another thing about Bill O'Neill is that he adapted, right? So he didn't just find something that worked and this is always going to work. You take that new information and absorb it and run with it if it's something that, okay, now this is working. So being able to adapt, and I feel like that's what traders today are also learning from and doing.
Flexibility is key.
Absolutely.
Flexibility, changing with the market, understanding what environment you're in, and don't get off the path of risk management and those type of things, but you can tweak some of the, because like I said, we can do a whole hour on how did each one who learned from the prior ones tweak that to fit their own strength and weakness. So
right. I know go ahead.
It's good stuff. I mean, I was just going to say that all those guys, O'Neill learned from Loeb, he learned from Livermore, he learned from Wyckoff. Back that up, Nicholas Darvis learned from Loeb, and this guy Humphrey Neal, who wrote a book in the 1930s, was one of my top 10 books called Tape Reading and Market Tactics. Wyckoff learned from Livermore. Bernard Baruch was out there. Loeb knew Baruch. They shared ideas. So these traders, they learned off of each other, and they learned how to read the market. Bernard Baruch was the first guy that I researched that matched the stocks and the leadership to what the market is currently doing. He became an expert at shorting in some bear markets, but staying out of like minor corrections, and then waiting for an upturn and really doing the research and kicking out the first leaders off that upturn. So if Baruch was still around today, trust me, he'd probably be in end phase and Celsius and probably going, okay, what's next? And if this thing continues, I'm going to jump and pounce all over the next ones. That's awesome. He knew what to look for. I mean, that was 100 years ago. So It doesn't change.
It doesn't. And it's fascinating stuff. I know we're just scratching the surface with you, John. And it may have gotten really cloudy in Atlanta.
It is
right before we started for some reason. But I love your sunny disposition. And I know I learned a lot today. And I know our audience did too. So thank you so much. It was so fun. And again, you're just scratching the surface, so we'll have to do it again sometime.
We'll do it again. Yeah, we're having a major thunderstorm right now. So sorry.
Oh, don't be sorry. Good luck with that. It's still nice and sunny here in North Carolina.
Well, thank you so much for having me.
Thank you.
It was really good.
Awesome. Thank you so much, and thanks everyone for watching. We'll see you back here next week. I hope you have a great weekend.
Bye.